Hello and welcome back. You're tuned into Buy Now Sell Now Weekend.
Well, time then to bring on board our portfolio query for the day, and it's Nikhil Bhavnani's lucky day. Let's hear him out.
Here's an MBA student you might want to take a lesson or two from, especially when it comes to investing in the stock markets. 25-year-old Nikhil Bhavnani's mantra is pretty clear. He believes making money in stock markets is a science and not a poker game. Nikhil makes sure he does his homework before investing in stocks.
When an expert gives an advice or picks a particular stock, accordingly I go and refer to the company reports, balance sheet, go online, read newspaper, and then start picking up stocks.
If diversification is the name of the game, then Nikhil knows how to play it well. His portfolio is an interesting mix of blue-chip stocks like L&T and HDFC Bank and mid-caps like IOB, Great Offshore and Godrej Consumer. But right now, he's losing out marginally on his portfolio and wants advice on entering stocks like Specialty Restaurants, BHEL and Kotak Mahindra Bank.
The return I'm looking at is for 15% return and basically beating the fixed deposit rates. So 15% is quite reasonable for me at this point of time.
So can Nikhil get a 10 on 10 when it comes to achieving this reasonable target? Let's ask our expert.
Okay, so Radhika, you've had a look at Nikhil's portfolio. He clearly does his homework before selecting the stocks. It's a mix of mid as well as large cap stocks. Do you think he can get that overall return of 15%?
I think he's one of the very few investors who has very reasonable expectations from the market. I think 13 to 15% over a long time horizon, particularly given he's starting young, is very, very reasonable. And if those are the expectations you're going in with, you're likely to perform on them. As far as his portfolio is concerned, it's a good portfolio. Like every portfolio, it has its mix of winners and losers. The two comments I would make. One is it's a 5-stock portfolio and it should be a little bit more diversified. So he should look to add a couple of other names and eventually build a 10 to 12 stock kind of portfolio. The second comment I would make is that it is very heavily skewed towards financials. And while, I'm bullish on financials, a lot of the market is, diversification across sectors is very, very important. So he should look to add other sectors like autos, some of the commodity-linked stocks as well.
Okay, so Nikhil, you probably need to diversify a little bit more, and we'll of course get to Radhika's specific recommendations in just a moment. So Radhika, let's take you to the counters that he already has. An L&T at 1700, which is of course looking a little bit expensive given the current levels, but an HDFC Bank as well as an Indian Overseas Bank. What does he do with those three counters?
Sure. Let's start with L&T. I think L&T is a good name. Yes, it's a little bit expensive, but I would hold on to L&T. L&T is really like the anchor portfolio in a stock. It's a large blue chip. If we move to sort of more stock specifics, order flows on the whole have been positive for L&T. And as you see a global economic recovery, you should see order flows pick up. Management has always been very, very solid, and L&T has managed to deliver in-line results even in pretty tough market conditions. So I would definitely hold on to L&T.
And what about the next two then, an IOB as well as an HDFC Bank?
So, as far as HDFC Bank, again, that's a clear hold. HDFC Bank is, a stock that's mastered the art of sort of delivering consistent results even when the banking pack has gone through a lot of pressure. Loan growth solid, credit growth solid. So on all fronts good. A little expensive on the valuations front. So HDFC Bank is not going to deliver you a 30% upside. But if you're looking for that consistent kind of 15%, I think you'll get it from HDFC Bank.
And finally, IOB?
IOB is the one I would actually replace. IOB is the cheapest stock in his portfolio in terms of valuation. But in terms of sort of the net income numbers, poor asset quality concerns and moderating loan growth, IOB is a little bit of a point of concern. I also think if he has to play the public sector bank theme, there are other mid-cap public sector banks he can play. Alternatively, he can reduce the IOB position and diversify it into something else in an autos or commodities space.
Okay, that's the advice on the first three stocks. Radhika, what do you think he should do with Great Offshore, on which he's losing out, as well as Godrej Consumer?
Great Offshore, pretty straightforward. I would sell out of that stock and move into another sector. As far as Godrej Consumer is concerned, definitely hold on. Very strong stock, great domestic and international numbers, and the company has cut down debt recently also. So that's a very bullish sign for the stock and a good anchor in the portfolio. Low beta stock.
Okay, so Nikhil, you can exit your investment in a Great Offshore, but stay invested in that Godrej Consumer. But he also has identified three stocks that he'd like to buy, Radhika. A specialty restaurant, a BHEL, as well as a Kotak Mahindra Bank. Do you think they are good buys?
I would buy two of these, that is BHEL and Kotak Mahindra Bank. As far as specialty restaurants is concerned, it's just recently IPO'd. It's trading at the expensive band, even compared to other restaurant stocks. And with small IPOs, you need to be cautious. Let's give the stock time, let's give the business model time, let's give the operations and financials time before he enters into something like the specialty restaurants.
Okay, Nikhil, so that's the advice that Radhika has on the overall portfolio that you sent in, plus a few recommendations that you had. So she advises that you hold on to an L&T as well as HDFC Bank. IOB is an exit. Kotak Mahindra Bank, the question that you had, is an enter. An upside target of 662 can be achieved. Bajaj Auto would be an alternative buy as well from a Great Offshore. Godrej Consumer is a good stock, and BHEL definitely a thumbs up with an upside target of 265. But here's also an important disclaimer from our end for Nikhil as well as everyone watching. This is a model portfolio, so do consult your individual investment advisor before taking any investment decisions.
Okay, so we'll slip into a quick break on that note, but come right back because we'll get you two specific ideas from both Deepak as well as Radhika.
Is building up. Let's find out which trading strategies our experts are adopting. The winner for BNS and the Stock Yen this week is Kunal Bothra.
After a buzzing start, catch the last weekend of the Indo-German Urban Mela at the grounds next to Bangalore Palace. Presenting the Indo-German Urban Mela in Bangalore.
We wanted to invite the very young boys and girls to build up their dream city out of waste.
Watch the special episode on City Spaces, a panel discussion on solutions and ideas to build the city of our future. Only on ET Now.
Focused on money under management. So our focus is to find great companies and help them build. I think if you invest in right businesses, then money under management takes care of itself.
Catch Sanjeev Agarwal on Tea Time with Shelly Chopra, only on ET Now. Brought to you by Colgate Total 12 12-hour protection for a healthy mouth. Hyundai, this is where brilliance happens. Live brilliant. Reliance NetConnect are my best plan. It's simply better.
Whether it is the DVR or the share with the voting rights, I would look at whether I should own the stocks first and foremost in a portfolio. Which is nothing but taking a bet on the company on the basis of the fundamentals of the business.
Find out A. Balasubramanian's winning strategies on Meet Your Fund Manager, only on ET Now. Pranab Das, India's endearing FM, is moving on to become the head of state. How will UPA cope without his crisis management skills? And how will politics change after Pranab becomes the president? ET Now captures Pranab Mukherjee's rise from his modest origins to the highest seat of power. On UPA 2, Life After Pranab, only on ET Now.
there is no boom and bust situation per se, but there could be a time decay in these stock prices because stocks have done well, companies are doing quite well. So stocks may remain flattish, they may not participate in a rally, but obviously vice versa, they will not also fall because companies are doing fundamentally quite well.
That's Dipesh Pandey on Market Makers, view from Singapore, only on ET Now.
It's a multifaceted crisis that's threatening the India growth story. India Inc. is desperate for reform and a boost to sentiment. But all is not lost. With every adversity lies an opportunity, presenting surviving the slowdown. Meet India's top CEOs with slowdown survivors on putting the economy back on track. Only on ET Now.